Let's bring in Vicky Pryce, international economist, joining us here in London. Hello, Vicky. So we've had some quite strong comments from Scott Bessent in the last hour or so. What do you make of it?
I think it suggests to me that they are worried and that they want to calm the markets because of the cost of just servicing the debt. It's not just a case of, and worry, of course, that everyone has about the size of the debt, but it's also what it's costing to just pay the interest on it, which suddenly last year amounted to over $1 trillion. And I think that's quite significant, as you can imagine. We've also got, of course, the issue of the actual deficit being rather larger than what had been promised, because, you know, if you look at the most recent president, but also what was being attempted at the end of the Biden era was to try and reduce the deficit as a percentage of GDP. Well, I'm afraid that's still about 5.5%, and that is another worry. So is there anything in the pipeline, if you like, which is going to be possibly reducing that deficit in the future and do something about reducing also the debt pile that's out there and therefore the cost of servicing it? And for the moment, just the action that we just heard about buying perhaps one's own treasury bills and doing that in a bigger way than was originally intended, so 4 billion a week rather than just 2 billion a week, isn't going to do it by itself.
Bessent also said he thinks that bonds have hit peak yields. Do you agree?
Well, who knows? I mean, if he says so, then he must have something to bring to the table. The question is, of course, whether the bond markets think that, in fact, debt is going to continue to increase. The other question is whether they think that inflation, even though it's just been reported by your correspondent, has been coming down a bit, whether, in fact, that is just temporary, because we still have the problem of oil prices being very high. If you just look at the market today, we saw Brent crude up to $93 a barrel. It's been showing no sign of really coming down. And if anything, if you look at what's happening in the market in terms of yields, they're going up, not just in the US, of course, but more generally. So I think the markets are taking fright. They're moving to other types of investment that they want to put their money into. And that, I think, is a concern in terms of funding the debt at relatively low interest rates in the future. It looks like it's going to be rather difficult to do.
At what point would America's debt actually undermine confidence in the bond market and the dollar? Are we even close to that?
Well, it's interesting you ask about the dollar. Of course, what everyone is saying is that if you look at the US, it can just print more money. I can do all the things that Scott Bessent said he's going to be doing. The Fed can intervene and perhaps, buy more bonds in the secondary market rather than reducing the amount that it's holding already, which is, of course, in the trillions. It has reduced them, but it stopped doing so. So it may be more accommodating. But generally, of course, we're not talking about a country that is going to default, and therefore the bond markets are unlikely to get particularly worried to the extent that there will be a crisis. But there is no doubt that if you look across the world, there is a retreat from funding government debt. And I don't think it's going to be affecting just the US, I'm afraid. Some countries might find it a lot more difficult to deal with the situation. But a weaker dollar, of course, adds to inflation. And that is going to be a worry that of course, President Trump is going to have. And, of course, the Fed, which may want to rethink its interest rate stance, as we've just been discussing.
When we look at this $40 trillion hole, it's nice to point a finger of blame. And I'm wondering how much of this growing debt is bad luck. I'm thinking pandemics, the global financial crash, natural disasters. And how much is bad choices, overspending, starting wars, that sort of thing?
Well, I'm afraid it's a combination of all these things. There is no doubt that because of COVID, well, it all started with the financial crisis where there was an extra, trillion or two which had to be put into the economy. Then we had COVID, and there was a big budget stimulus which was given to the economy, particularly by Biden. There was a little bit also by Trump. That has again been in the trillions. And then, of course, there is the issue of what's going on right now in terms of President Trump himself cutting taxes and giving more incentives for the economy to grow, which, of course, has affected the amount of revenues that he's been collecting. And the other unfortunate thing, perhaps, is that the economy has not grown as fast as had been expected because you can't cover that debt and you can't cover the actual interest that you have to pay on your debt. If the economy does well, Well, the economy has done perhaps better than some other countries, but if you look at what's going on even this year, the last quarter has seen annualized growth of just 1.5%. It was over 2% in the first quarter, and there are serious concerns as to where some of the money that you need in terms of taxes to reduce some of the deficit that I spoke about is, of course, going to come from. And then, of course, you've also got the repayment of the tariffs, now that they have proved some of them to be illegal, which has cost an extra, whatever, 160 billion maybe, a little bit more so far. So it all adds up, I'm afraid. So it's a series of, yes, accidents, but also some deliberate mistakes.
Thank you so much. Vicky Pryce is an international economist based in London.